ESG fund investors have a variety of goals: sustainable investing, socially responsible investing, and impact investing. Ni Jiawei has made his priority funds holding shares in new energy vehicles. He began looking at investments in ESG funds last year, when China announced its goal of reaching carbon neutrality by 2060. This year, he's already made a 10% return on his ESG investment.
So far this year, ESG funds have nicely outperformed my other funds, like Baijiu, which is still down 5% for the year. I started with funds in new energy, which fits with the country's green strategy and also with the consumption trends. And I feel like NEVs are close to the way I want to live.
As of the middle of July, there were 164 ESG funds in China, focusing on projects in new energy, environmental protection, and carbon reduction. They are growing quickly, driven by China's pursuit of green and sustainable development. And they're attracting plenty of individual investors like me, creating large potential market for financial institutions. During the first half of the year, sales of ESG funds through Standard Chartered Bank in China were up 18 times from the same period last year. Funds related to environmental protection were up 38 times. Standard Chartered is looking for more.
We're working to screen for more domestic publicly offered funds that meet our standards, and we're hoping to work with well-known international ESG rating agencies to offer risk evaluation statistics for our clients. An increasing number of high net worth individuals are interested in having 100% sustainable investment portfolios. So we're developing more ESG investment portfolio models for them.
More diversified ESG funds are emerging in the domestic market, in exchange-traded funds or ETFs, thanks to a greater emphasis on green and sustainable development on the part of A-share listed companies. As of the end of last month, the China Securities Index Company had 74 indexes related to ESG or sustainable development investments, and 45 financial products have been launched based on those indexes. Together, they're worth more than 61 billion yuan, an increase of almost 40% from this March.
In the long run, ESG indexes can perform very well. The annualized return rate of the CSI 300 ESG index is 1% higher than that of the CSI 300 index. And the annualized return rate of the CSI 500 ESG index is 2.3% higher than that of the CSI 500 index. ESG investments from old age pension will play a leading role. More pension funds are being put into ESG investments around the globe and are showing good results for institutional investors.
China has committed to peaking carbon emissions by 2030 and achieving carbon neutrality by 2060. Experts predict the cost of this will be both high and uneven across the country, and that the process could require more than 100 trillion yuan of total investment. Getting investors to part with that money could take some convincing.
Cultivating long-term green investment awareness among individual investors is very important to enhance the attractiveness of green funds. High cost of information searching is another reason that restricting the investment behavior of individual investors. Therefore, information disclosure should be further improved to enhance confidence of investors.
China's central bank has announced that it will give priority to ESG-themed investments and encourage long-term social funds to direct their money into them. As of the end of June, more than 4,000 public-private partnership financing agreements in pollution prevention and other green low-carbon projects had been signed in China. Their total investment values came to 4.1 trillion yuan. Zhang Shixuan Money Talks.